Welcome, dear traders. You are watching a recap of the Asian session. Following soared sentiment on Wall Street yesterday, Asian stock indexes started Tuesday with modest gains. The only exception was the stock indexes of Japan and Hong Kong. Japanese shares are still in a high demand among foreign investors amid the weak yen, and the Nikkei is trading at its 30-year high. In general, trading in equity markets is sluggish now as investors are waiting for the results of the Fed meeting next week. During the blackout period, Fed policymakers do not provide any comments on the fresh macro stats, so investors have to make forecasts based on their own expectations. However, the overwhelming majority of speculators believe that the Fed will take a pause. According to the FEDWATCH tool, over 75% of traders factored in such a scenario. As investors are sitting on the sidelines, market volatility is rather low today. The VIX index plunged to 14.7%, the lowest level since November 2021. A sharp drop in the services PMI index in the United States and factory orders also signaled the likelihood of a pause in the tightening cycle. Inflation figures will be published next week, and they are likely to have a significant impact on the Fed's final decision. Unlike the stock market, the US dollar index is trading rather volatile today. It was steadily falling against its rivals in the range of 103.80 and 104.00. In the morning, it retreated due to the weak macro stats, as the latest data triggered some concerns about the stability of the economy. Treasury note yields also declined. In the Asian session, the greenback gained momentum. It broke below the key support level of 104, but after that it rebounded to 103.90. Now the US dollar index is hovering near the support level of 103.40, and this is the June low. It may also touch 102.90, and the resistance level for the US dollar is located at 104.60, which is the high of late May. The yen was trading near 139.30 in the Asian session. National currencies usually decline amid growing stocks, and Japan seems to be an exception to this rule. While the shares of Japanese companies are climbing to new highs, demand for the yen is growing as well. As a result, the dollar-yen pair fell to 139.10, moving in the downward range of 139.00 and 139.70. In the case of a further rise, the pair is likely to face resistance levels of 139.70 and 140. However, today the yen is likely to be the strongest currency in the pair. It could drop below 138.70 and even test 138. The fact is that the Bank of Japan may conduct its first intervention in the foreign exchange market this year. In order to keep inflation above the 2% target, the regulator consistently pumps the country's economy with liquidity. Sustained inflation needs steady demand and wage growth. To do this, the central bank maintains its ultra-loose monetary policy. Inflation in Japan largely depends on external factors, namely energy prices. Given the aggressive stances of the other central banks or uncertainty over their further moves, the volatility of the yen is growing markedly. Therefore, the Bank of Japan is expected to intervene using its dollar reserves to buy the yen. The Reserve Bank of Australia unexpectedly raised the key rate by a quarter of a point again. The regulator did not rule out further tightening, as inflation in Australia is still constantly high and far from the 2 and 3% targets. This was the 12th rate hike in a row, and the interest rate jumped to the highest level since April 2012. After the unexpected rate increase, Australian Treasurer Jim Chalmers made a speech. At the press conference, he said that the government does not expect a recession in the economy. However, the Australian dollar is more sensitive to external factors, so this is why its movements will depend on the Fed's rate decision and negotiations between the United States and China. It's hard to predict the outcome of these events. Therefore, the pair was trading at 0.6688 and it was moving in the range of 0.6610 and 0.6685 in the Asian session. Oil prices, which climbed on a Monday, lost momentum today. Commodity currencies stumbled too, so the upward movement of the AUD-USD pair looked more like consolidation at 0.6660 at the end of the Asian session. The Kiwi also advanced in the morning. The Kiwi dollar pair was trading below 0.61. It was moving in the range of 0.6070 and 0.6101. And that's all for now. Subscribe to our channel and have the latest market news at your fingertips with us. See you soon.